Hello, fellow traders. Today we're going to get into better understanding one of the most powerful concepts in technical analysis, support and resistance levels. We'll take a practical approach, focusing specifically on how volume confirms these critical price zones. And to make this immediately applicable, we're going to use the SPY. Throughout our lesson, we'll go over the support and resistance zones to better understand. And by the end of this video, you'll have a better idea of where these levels are and how to identify and trade them with confidence. Today we're going to get into what is support and resistance levels, explained simply by a pajama trader. Let's get into it. What are support and resistance? Support and resistance represents fundamental building blocks of technical analysis. These levels are where supply and demand forces meet in the market. Think of support as a floor underneath the price, where buying interest becomes strong enough to overcome selling pressure. Resistance is the ceiling where sellers become more aggressive than buyers. These horizontal levels connect price highs to other price highs, or lows to other lows. They aren't random. They represent real decisions by market participants. When you understand these levels, you'll gain insight into where the market might pause, reverse, or accelerate. Support resistance is like invisible barriers on a price chart. Support acts as the floor where buyers step in, while resistance is the ceiling where sellers dominate. Think of these levels as psychological levels where market participants react based on the past practice. The power of support. Support forms when enough buyers step in to absorb selling pressure. On our SPY example, we can see support has formed recently around 567.99. Notice how the price respected this level multiple times. Each price approaches support. Buyers see value and step in. The more time support holds, the more significant it becomes. But here's key insight that many traders miss. Volume tells us conviction behind these moves. When the price touches support with expanding volume and bounces, that's much more meaningful than a low volume touch. Support is where demand outweighs supply, creating a price floor. Look at SPY's recent support around 567.99, and each time the price approached this level, buyers stepped in to push it back up. But here's the key: the volume is the strength of the support. When the price bounces off the support with increasing volume, it signals strong buyer conviction. Without volume confirmation, the level may not hold. The psychology behind these levels. The power of support and resistance comes from collective marketing psychology. Imagine investors who bought the SPY at 550 support. The price rises to 570, validating their decision. If the price returns to 550, they often buy more, what they considered a good price additionally. Traders who missed buying at 550 feel regret as the price rises and promise themselves that they'll buy, give it another chance. This creates a pool of potential buyers waiting at that level. Similarly, psychology works at resistance. Traders who missed selling at the previous high promise themselves that they'll exit if given another chance. This collective behavior creates memory in the market that appears to be visible support and resistance in our charts. Support and resistance aren't just finding lines on the chart. They reflect trader psychology. Imagine buying the SPY at 550 and watching it rise to 570. Then it drops to 550. You're likely to buy because it feels like a good deal again. Similarly, traders who miss selling at 570 will jump in at another chance too. This collective behavior creates the self-fulfilling zones of activity that we can exploit as traders. Why is volume the critical confirmation tool? Volume is the secret weapon for validating support and resistance levels. Price alone tells us that what happened. but the volume reveals how significant it was. High volume as support confirms strong buying interest. Low volume suggests weakness and potential breakdowns. For breakouts above resistance, expanding volume is crucial. It shows conviction behind the move without confirmation. Breakouts often fail and reverses quickly. While price defines support and resistance levels, volume confirms their significance. Think of volume as a conviction meter behind price movement. When SPY approaches support on heavy volume and bounces, it shows strong buying conviction. Likewise, high volume resistance tests demonstrate substantial selling pressure. The most reliable levels show notable volume increases when the price interacts with them. Always remember, price tells you what happened, but volume tells you how significant it was. As traders, we want to focus on the most significant levels, and the volume helps us identify those. Volume is the secret weapon for validating support and resistance levels. Price alone tells us what happened, but the volume reveals how significant it was. High volume as support confirms strong buying interest. Low volume suggests weakness and potential breakdowns. For breakouts above resistance, expanding volume is crucial. It shows conviction behind the move. Without this confirmation, breakouts often fail and reverse quickly. Volume confirmation patterns. Let's examine specific volume patterns that confirm support and resistance levels. When price approaches support with increasing volume and bounces, that confirms strong demand. Conversely, if we see price repeatedly test support with diminishing volume on each test, it suggests buying enthusiasm is waning. A breakdown may be imminent. For breakouts, volume expansion confirms that the supply-demand imbalance is genuinely shifted, validating the move, suggesting follow-through. Low-volume breakouts often fail and reverse. These volume patterns often precede significant price movements and create high-probability trading opportunities. Here are some patterns to watch for. Rising volume as support indicates strong demand and likely bounces. Declining volume on repeated resistance tests suggests an impending breakout. Low volume breakouts often fail, and expanding volume during breakouts confirms continuation potential. These patterns are your roadmap for predicting future price action. SPY recent chart analysis. Now let's apply these concepts to SPY's recent price action. As of March 11, 2025, the SPY has defined support at 567.99 and resistance at 581.13. The most significant recent development occurred on March 10th when the SPY fell 2.65% from 575.84 to 560.58. This represents a breakdown below established support. What makes this move particularly significant is that it occurred on expanding volume. 97 million shares traded for approximately $54.42 billion, with volume increasing by 21 million shares compared to its previous session. This volume expansion during support break provides strong confirmation of the move's validity. When volume increases on declining prices, it typically suggests genuine distribution rather than a merely temporary pullback. Volume tells the real story. Volume tells us the story behind the SPY's recent move. While the price broke support, expanding volume confirms this wasn't just a technical break, but reflected genuine selling pressure. Despite the MFI reading of 22 putting the SPY in oversold territory, the high volume nature of the decline suggests institutional distribution rather than capitalization. The pattern expanding volume on declining prices typically precedes further downside movement. Also note that broken support around 576 will likely become resistance on any recovery attempt. What traders call polarity or level correcting or level flipping Any retest of this level should be watched closely, especially with attention to volume patterns. Trading strategies using support and resistance with volume. Let's discuss how to trade these patterns. The most basic application involves buying near support levels when the price approaches with increasing volume. This confirms genuine demand. For SPY, this might involve watching for potential buying if the price consolidates near $567.99 with expanding volume. Similarly, sell or short near resistance when the volume increases. Breakout trading means entering when the price conventionally breaks through established levels with expanding volume. With SPY having broken below support while on high volume, we might look for continuation or watch for failed retest of broken support around 576 to 581. False breakout strategies capitalize on low volume breakouts that often fail. These create counter trend opportunities with defined risk. Here's how you can trade these setups effectively. Buy near support when rising volume confirms demand. Sell near resistance when expanding volume signals strong supply. Trade breakouts only if accompanied by surging volume. Fake weak breakouts that lack conviction, and always watch for divergencies between price action and volume. These often precede merger reversals or trend continuations. Catching the SPY current trading opportunities. Based on our analysis, let's identify current trading opportunities in the SPY. The most immediate setup is to watch is a potential retest of broken support around 576 to 581, which should act now as resistance. If the price rallies to this zone on declining volume and then turns down with expanding volume, that creates a high probability short entry. Your stop loss would go above the recent high with targets at recent lows. Alternatively, if the price finds support at current levels with expanding volume, we might consider a bounce play with a tight stop below support. Remember that current technique picture remains bearish with the SPY below 576, especially given the high volume breakdown that we witnessed. Always wait for volume confirmation before entering any position. Right now, SPY offers two key opportunities. First, watch for a retest of broken support around 576 to 581. It should act as new resistance if sellers remain in control. If the volume rallies into this zone on declining volume and then reverses with expanding selling pressure, it's ideal for a short setup with tight risk management parameters, a stop around 581 alternatively. If buyers reclaim 576 on strong volume, then we could see a bounce play targeting higher levels, but wait for confirmation before entering. Recap and best practices. To summarize, support and resistance represents fundamental building blocks of technical analysis, the levels where supply and demand forces meet in the market. While these price levels are important, volume confirms their significance and helps us identify most reliable trading opportunities. Our SPY example demonstrates how these concepts apply in real-world trading scenarios. The recent high volume breakdown below support provides a bearish signal, suggesting potential further downside in the near term. This framework applies to any market in any time frame, making it incredibly versatile. By incorporating volume analysis with support and resistance, your trading decisions become clearer and more objective. When applying these concepts, remember to avoid common mistakes. First, avoid drawing too many levels. Focus only on significant ones with multiple touches and clear volume confirmation. Second, remember that broken support becomes resistance and vice versa. This polarity principle creates excellent trading opportunities. Third, markets rarely respect exact price points. Think in terms of zones rather than precise levels. Fourth, and most important, never ignore volume. Price tells what happened, volume tells how significant it was. Finally, match your time frame analysis to your trading style. For day traders should focus on intraday levels, while swing traders need daily and weekly levels. To turn this knowledge into action, identify 2 to 3 key support and resistance levels on the SPY. Don't overcomplicate it. For SPY, our immediate focus is at 576 to 581 resistance zone and support around 567.99 and 560.58. Next, mark the behavior at each level. Is volume expanding or contracting when price touches these areas? Watch for the 576 to 581 zone carefully for potential resistance. This broken level of support should not repel price if our analysis is correct. Look for volume expansion to confirm any breakouts or breakdowns. This is your validation signal. Finally, if these concepts are too new to you, start with paper trading before risking any real capital. Document your observations in a trading journal to accelerate your learning. To summarize, support and resistance are fundamental technical analysis, representing where supply and demand meet. Volume confirms the significance of these levels, making them actionable for trading. Our SPY example shows how these concepts can apply to real trading scenarios. The recent high volume breakdown below support is a bearish signal, suggesting potential further downside. When applying these concepts, avoid common mistakes. Focus on significant levels with multiple touches and volume confirmation. Remember that broken support becomes resistance and vice versa, creating trading opportunities. Think of them in terms of zones rather than precise levels. And never ignore the volume. Match your time frame analysis to your trading style. Conclusion. Support and resistance levels are the foundation of technical analysis. These levels, combined with volume analysis, provide critical decision points for traders. By focusing on high volume interactions at these levels, traders can significantly improve their trading edge. Our SPY analysis demonstrates how these concepts work in real time, offering actionable insights for your trading. I encourage you to immediately apply these principles to your charts. Start simple, identify key levels, and observe volume behavior, and practice spotting the patterns we've discussed. Your trading will never be the same once you master this approach. As we conclude in today's video, remember that support and resistance levels represent fundamental language of the markets. These invisible barriers reflect collective trader psychology and provide critical decision points for your trading. However, price alone doesn't tell the complete story. Volume is the essential confirmation tool that separates significant levels from the noise. By focusing on high volume support and resistance interactions, you dramatically change your trading edge. Our SPY analysis demonstrates how these concepts work in real time, providing actionable insights to your trading. So apply these and identify the levels, observe the volume behavior, and practice spotting these patterns we discussed. If you found value in this video, give it a like. Share it with other like-minded traders looking to level up their trading. And consider subscribing for more Market Edge videos and alerts like this one. Thanks again for watching.